In the 2021 bull market, the top-performing cryptos were so-called Ethereum killers, such as Solana. Case in point, Sol rallied by nearly 100x in a matter of months. This time around, so-called Solana killers could be the top-performing cryptos, and these include SUI and Aptos, which have a shared history, use similar technology, and are seen even as a threat by Solana's founders. And that's why today we're going to compare SUI and Aptos across a series of metrics to figure out which of the two has the most potential in 2025.
Which one?
The answer might surprise you. My name is Nick. Stay tuned. You know the drill. Nothing in this video is financial advice. It's educational content intended to inform you about SUI and Aptos. And also do note that members of the Coin Bureau team hold both SUI and APT as part of their personal portfolios. So we will be as objective as possible in our analysis, as always. If you want to know which other cryptos we hold, you can become a member of the Coin Bureau Club. We not only showcase our full crypto portfolios and watch lists, but also do deep dives into promising small cap altcoins every week that are voted on by our members, like altcoins in the SUI and Aptos ecosystem. If this sounds good to you, well, then you can become a member of the Coin Bureau Club using the link down below. Now, we will compare SUI and Aptos across 5 different metrics: founders and funding, technology, tokenomics and price potential, adoption, and challenges. At the end of the video, we'll see which project won each round and reveal which one has the most potential in this crypto bull market. Let's start with round 1, founders and funding. As mentioned in the introduction, SUI and Aptos have a shared history. They were both technically founded by Meta back when it was still known as Facebook. The teams behind SUI and Aptos were part of the team that was working on Libra, Facebook's digital currency, which later rebranded to Diem. Facebook first revealed Libra in 2019, and it sent shockwaves around the world. As you can imagine, governments and central banks were terrified at the prospect of a privately issued digital currency competing with their national currencies. Initially, Facebook tried to comply by changing Libra's details. This included turning Libra into a stablecoin and rebranding to Diem in 2020. Unfortunately, this didn't work, and Diem was subsequently shut down in early 2022. However, by late 2021, the team behind Diem had already split into two, with one team founding SUI and the other founding Aptos. The team that founded SUI created a Californian company called Miston Labs to build it. The founders of Miston Labs are Evan Cheng, who used to work as the head of research and development for Diem's products, Sam Blackshear, who invented the Move programming language used by Diem, Adene Abiodun, who was the head of Diem's products, Kostas Chelkas, who worked on Diem's cryptography, and George Denizas, who worked as a research scientist on Diem's technology. Miston Labs raised $336 million from top-tier crypto VCs across 2 rounds in 2021 and 2022. Notably, FTX was the lead investor in the second round, which totaled $300 million. Miston Labs did buy back FTX's stake in the company and its allocation of SUI in the spring of 2023 for $96 million. This is presumably why SUI conducted a series of initial exchange offerings, or IEOs, around that time. These IEOs reportedly raised around $60 million, bringing SUI's total raise close to $300 million after the FTX repayment. Now, SUI's ongoing development is coordinated by the SUI Foundation, which is based in the Cayman Islands. SUI's mainnet launched in May 2023. Now, the team that founded Aptos created a Californian company called Aptos Labs to build it. The founders of Aptos Labs are Avery Cheng, the former lead developer and maintainer of Diem, and Mohammed, aka Mo Sheikh, the former head of strategic partnerships at Diem. In December of last year, though, Mo stepped down as the CEO of Aptos Labs. Like SUI, Aptos raised around $350 million from top-tier crypto VCs across 2 rounds, including a raise from, well, FTX. The difference is that Aptos apparently did not buy back FTX's stake. It's not exactly clear how much APT FTX had. A 2023 report notes that it held around 28 million APT, which is equal to about 10% of its circulating supply. It's possible that APT sell-in by the FTX bankruptcy estate contributed to its relatively poor price action in 2024. More on that later. Now, also like SUI, Aptos appears to have raised a significant amount of capital after its initial funding rounds. The difference in Aptos' case is that one of these funding rounds came shortly after the initial funding round, specifically in September 2022, when Binance increased its investment. Notably, Binance published a blog post explaining that it increased its investment due to Aptos' technology. Crypto VC Dragonfly Capital announced a strategic investment in Aptos around the same time. What's fascinating, though, is that Aptos reportedly raised even more money from another crypto VC called Foresight Ventures in September 2024. This funding round came shortly before Mo's departure. Probably nothing. Anyways, Aptos' ongoing development is coordinated by the Aptos Foundation, which is likewise based in the Cayman Islands. Aptos' mainnet launched in October 2022, shortly before FTX collapsed and the depths of the crypto bear market began, something that could also have contributed to its poor price action. But again, more on that later. By the way, if you're enjoying this video so far, don't forget to smash that like button to let us know. And don't forget to subscribe and ping the notification bell as well to make 100% sure you don't miss the next one. All right, time for round 2, the technology. Under the hood, SUI uses a delegated proof-of-stake blockchain that's capable of processing up to 297,000 transactions per second with sub-second finality. And this is made possible due to a series of novel technologies, the most important of which is the Move language. SUI uses a modified version of the original Move language called SUI Move, which keeps track of objects rather than accounts. For context, most cryptos use account-based models, which are analogous to card payments. You send money, your balance changes. The recipient receives money, their balance changes. By contrast, object-based models keep track of where that money is. In practical terms, this means that there's only a single transaction when something is moved on SUI's blockchain. The object is in this wallet, and now it's being moved to another wallet. And this subtle difference is part of why SUI is so fast. Another difference is that SUI technically uses a directed acyclic graph, or DAG, for transaction propagation and consensus. The specifics of DAGs are outside the scope of this video, but the key takeaway is that DAGs make it possible to process transactions in parallel rather than sequentially. The catch is that, unlike normal DAGs, SUI orders the finalized transactions linearly into checkpoints, which can be simply understood as blocks, hence why the final product looks like a regular blockchain. The difference in this case is that these checkpoints are already valid when added to the chain. There is no need to wait for a validator to verify the transactions before adding another block. It's already done. Speaking of which, SUI has only 109 validators, which is another reason why it's so fast. It's quite centralized. This might have something to do with the fact that you need a minimum of 30 million SUI to become a validator. That's roughly $120 million at the time of shooting, which is actually pretty crazy. Fortunately, there is no minimum stake for delegators. The caveat is that staking rewards are only around 2.6%, and there is a slashing risk. The silver lining is that the unlock time for staking is roughly 24 hours, which is much shorter than most proof-of-stake cryptocurrencies. Now, as for Aptos, under the hood, it uses a delegated proof-of-stake blockchain that can process up to 160,000 transactions per second, also with sub-second finality. And this is made possible due to a series of novel technologies like those on SUI, but slightly different, starting with the Move language. Aptos uses a version of Move that's more similar to the original Move language used by Facebook's Diem. Again, the specifics of this are outside the scope of this video, but the key takeaway is Aptos has limited object orientation compared to SUI and is more similar to standard account-based cryptos. This begs the question of how Aptos is so fast. And the answer is a truly novel technology called Block STM, developed by Aptos Labs. Like DAGs, Block STM makes it possible to process transactions in parallel, except that it's not a DAG. According to a detailed report by Amber Group, Block STM is apparently just as fast as SUI's DAG, though it is worth noting that both of these cryptos are working on new scaling solutions. In any case, this is interesting Because Aptos' account-based model basically explains why it's roughly half as fast as SUI. Recall that account-based models require 2 updates to the transaction history, whereas object-based models require only 1. The practical effect of this is that if you have 2 cryptos that have equally cutting-edge tech like Aptos and SUI, the object-based one will inherently be twice as fast. The catch in this case is that Aptos is much more decentralized than SUI, as it has almost 145 validator nodes and almost 500 full nodes. For reference, SUI stopped publishing the number of full nodes on its Explorer some time ago, possibly because it's in the process of switching to using a new storage protocol. Regardless, the minimum stake to become an Aptos validator is 1 million APT, which is still a pretty penny, as it works out to almost $8 million at the time of shooting. And not only that, but the minimum stake for delegators is currently 11 APT, which isn't cheap for a lot of people. The good news is that staking rewards are currently around 7%, and there's no slashing risk. The bad news is that any staked APT has an unlock time that's as long as 30 days. The exact unlock time depends on when you start staking within each 30-day cycle. I won't get into the weeds here. Cool. Time for round 3, tokenomics and price potential. SUI is the native cryptocurrency of the SUI blockchain. It's used for staking, to pay for transaction fees, and for governance. Notably, a portion of all transaction fees on SUI are locked to pay for the cost of storing any associated data on-chain. And this creates a dynamic like partial transaction fee burns, though this locked SUI is technically not destroyed. SUI has a maximum supply of 10 billion, which was allocated as follows: 6% to the community, 10% to Miston Labs, 14% to investors, 20% to early contributors, and 50% to community reserves, including staking rewards. The vesting schedule for this SUI is infamous for being incredibly aggressive. As you can see, there was a massive vesting cliff in April last year that nearly doubled SUI's circulating supply. SUI circulating supply is scheduled to double again by the spring of 2026 per the aggressive linear vesting. For what it's worth, SUI's vesting schedule is much less aggressive after that. Now, although there was lots of FUD around the effects of last year's vesting cliff would have on its price, there's no evidence that it did, particularly because the rest of the crypto market started crashing around that time. In fact, SUI's price seems to have been essentially unaffected by its aggressive vesting so far. This is reminiscent of what happened with Solana during the previous crypto bull market. To refresh your memory, 90% of Sol's supply was unlocked in January 2021, but it literally had zero effect on its price. Sol went on to rally by 50 times, and it seems that SUI is following Solana in more ways than one. On that note, we believe that SUI could be following Solana one cycle behind by market cap. And that's because SUI is considered to be a top competitor to Solana, even by Solana's own founders. Solana hit a market cap of around $80 billion in 2021. If SUI follows suit, an $80 billion market cap would translate to a SUI price of around $20 when you factor in the vesting we're likely to see between now and then. As for Aptos, APT is the native crypto coin of the Aptos blockchain. It's used for staking, to pay for transaction fees, and governance. Like SUI, a portion of transaction fees are locked to pay for the cost of storing any associated data on-chain. The difference is that the remaining portion is burned, and this creates a dynamic like full transaction fee burn, though the storage fee is also technically not destroyed. APT had an initial supply of 1 billion, which was allocated as follows: 51% to the community, 19% to contributors, 16.5% to the foundation, and 13.5% to investors. Some of you might recall that these tokenomics were controversial when Aptos launched and were also revealed at the last minute. As you can see, APT's vesting schedule is effectively just as aggressive as SUI's, having likewise experienced an almost 50% supply increase last spring. There are 2 important differences though. And the first is that APT has an inflation rate of 7% that will decline slowly each year until it hits 3.25%. And the second is that Aptos' tokenomics specify that locked APT can be staked. meaning that early investors and insiders could earn staking rewards on their locked APT. It's not clear if these rewards can be sold, but APT's price chart certainly looks like they can be, as it's been constantly going down. Switching the lens to market cap reveals that while APT's price has been falling, its market cap has been rising. And this suggests that insiders have been dumping. For what it's worth, APT's market cap is forming a cup and handle pattern, which could create some positive price action in the short term if it plays out. In the long term, we also believe that Aptos could also be following Solana one cycle behind by market cap. The catch in this case is that even if this is true, APT's supply growth, inflation, and locked staking dynamics mean that APT may not hit a price higher than $70 or $80, which is still not too shabby. Great, time for round 4, adoption. SUI's flagship wallet extension has over 1 million downloads, though it's likely that this number is a bit higher due to all the other Move wallets that support SUI. SUI's Explorer notes that there are around 1.5 million to 2 million daily active wallets, so these numbers, they check out. If you've been keeping up with our SUI updates, however, you'll know that SUI's daily active wallet count has practically been flat for months. Meanwhile, SUI's price has continued to rise, along with the total value locked in its DeFi protocols. This suggests that it's mostly whales and not much retail yet. Additional evidence for this can be found in the fact that SUI's SUI Play handheld gaming device has only sold around 7,000 units. While it's possible that this is due to its cost, it costs around $600, the discrepancy between SUI's apparent user base and SUI Play purchases could be evidence of minimal retail activity. Another peculiar indicator is the supply of stablecoins on SUI, which has likewise been flat for almost a year. For those unfamiliar, stablecoin supply is both an indicator of on-chain liquidity flows and on-chain activity related to things like payments and savings. It seems both have been quite static on SUI. But this could change soon, since Eric Trump, one of Donald Trump's sons, reportedly holds SUI. SUI is also one of the sponsors of Trump's inauguration. When you combine this with the fact that SUI is technically made in America, it foreshadows significantly more retail exposure and adoption. As for Aptos, its flagship wallet extension has around 500,000 downloads, and it's again likely that this number is higher due to all the Move wallets that support Aptos. And this is corroborated by on-chain data from Into the Block, which notes that there are around 1 million daily active wallets on Aptos. In contrast to SUI, however, the number of daily active wallets on Aptos has been rising fast since last September. And you'll recall that this is around the time that it raised additional capital from Foresight Ventures. Reports about the raise note that the funding round was to increase Aptos' adoption in Asia. Since that time, the number of daily active wallets on Aptos has risen by more than 6x. At the same time, data from DApp Radar reveals that dApps on Aptos are starting to gain traction. Even though the activity on the largest dApp is just because of a partnership with the Web2 social media app Chingari, there are many GameFi dApps on Aptos with hundreds of thousands of monthly active wallets and growing. At the same time, the supply of stablecoins on Aptos has been going parabolic, having more than doubled over the last 2 months. And if you've been keeping up with our Aptos reviews, you'll know that this is no coincidence. Aptos added support for USDT last year and was explicit about its intentions to use it for payments in conjunction with the Petra wallet, which will soon be getting its own physical crypto card. Whereas SUI is held by Eric Trump and sponsored Trump's inauguration, USDT stablecoin issuer Tether has close connections to the Trump administration via Cantor Fitzgerald, which custodies its reserves. Cantor Fitzgerald's CEO, Howard Lutnick, has a close relationship with Trump and Elon Musk, who is another key player in Trump's inner circle. Not only that, but PayPal was also an early investor in Aptos. And FYI, former PayPal executives also have strong presence in the Trump administration. Besides Elon, a PayPal co-founder, we have David Sachs, who is Trump's AI and crypto czar, and JD Vance, whose career was bankrolled by Peter Thiel. And you can learn more about the cryptos held by or related to Trump and members of his administration by using the link right over here. Awesome. Now for the final round. Challenges. SUI's biggest challenges are arguably adoption, competition, and development. Starting with adoption. it appears that SUI has yet to achieve significant retail adoption. Again, this could change soon, but as it stands today, it seems to be lacking. This might have something to do with SUI's strategy. For those unfamiliar, the first step in SUI's strategy is to achieve mass adoption via gaming. And as we've noted in our SUI updates, the biggest challenge on that front is that they are focusing this first step on the SUI Play handheld device, whose sales have so far been underwhelming. And this relates to the second challenge, and that's competition. As some of you may have heard, Solana's Phantom wallet recently integrated the SUI blockchain. This makes SUI accessible to over 15 million users, which should result in more adoption, at least in theory. In practice, there's nothing that really differentiates SUI from Solana from the perspective of the end user. They're both very fast and easy to use. In other words, there's no clear reason why a Solana user on Phantom would want to switch to SUI, at least not yet. SUI's upcoming developments could create an incentive for users to switch over, and if they're successful, then it could in fact facilitate the onboarding of tens of millions of new users to SUI. And this relates to SUI's third challenge though, and that's development. In case you missed the memo, SUI experienced an outage last November, and when you realize that SUI is working on truly cutting-edge tech, you understand that the risks of technical issues are higher than they are for more battle-tested cryptos. This is especially true when you remember that SUI isn't just working on another account-based blockchain. It's working on a brand new object-based blockchain that's coded in a relatively new programming language that's been further modified and continues to be tweaked. Higher risk of error. As for Aptos, its biggest challenges are arguably tokenomics, competition, and development. As is often the case in crypto, Aptos' apparently exponential adoption in recent months has been completely overshadowed by the fact that APT whales have been simultaneously dumping on retail. On the one hand, the fact that Aptos has been around for more than 3 years means that most of the selling pressure is probably over. On the other hand, we have yet to see any concrete evidence of this. APT has underperformed even more than ETH, and if this continues, its adoption could suffer. And this ties into Aptos' second challenge, and that's competition. Aptos' leadership, or its investors, seem to have recognized that it doesn't stand a chance against onshore crypto projects like Solana and SUI, hence why it appears to have pivoted towards focusing on offshore jurisdictions, namely Asia. The problem is that Aptos is also technically a made-in-America crypto. When you consider the geopolitical rifts that are likely to emerge because of the Trump administration, this could create a scenario where Aptos is either forced to change its location or be prevented from serving users in countries like China. Never mind the fact that there are lots of promising offshore crypto projects Aptos is competing against. This relates to Aptos' third challenge, and that's development. When you compare SUI and Aptos' developer teams, it's quite easy to see which one is superior, at least at first glance. Upon closer inspection, you realize that Aptos' decision to stick to using the account-based model and not messing about too much with Move's underlying code means that Aptos should be less prone to technical issues. Even so, that doesn't change the fact that Aptos is comparatively limited on the innovation front, at least from our non-technical perspective. As such, Aptos' development challenge is more around not shipping the kind of cutting-edge technology that SUI is. The ironic part is that even though Aptos is slightly less cutting-edge and theoretically less prone to issues, it also experienced an outage once in October 2023. Okay, gloves down, let's see who won the fight. SUI wins the first round for more reasons than one. Its founders are heavier hitters, it seems to have raised more money, and it also has bought back FTX's stake as quickly as it could after the exchange collapsed. Operationally, SUI seems to be more effective, and we'll come back to strategy in a second. SUI also wins the second round, just because its technology is truly cutting edge. As far as we can tell, there is no other cryptocurrency like it. Now, SUI seems to be the only crypto project using the object-based model to such a large scale. And of course, what we explained only just scratches the surface of what's under the hood. Believe it or not though, but Aptos wins the third round, and this is simply because SUI's theoretical cycle top is only around 5x from its current price. whereas APT's theoretical cycle top is around 9 times from its current price. And you'll recall that SUI's theoretical cycle top is also more optimistic, whereas APT's is more conservative. And this means that it has more room to surprise to the upside, and its on-chain metrics suggest that it could. Aptos also wins the 4th round precisely because its on-chain metrics clearly show that its adoption is growing rapidly, whereas SUI's has been stagnant. I'll remind you that this change in trend seems to have started after a fresh round of investment and change in leadership and strategy late last year. From the outside looking in, it looks like Aptos is finally on track, and chances are that its price will hopefully follow suit. And this brings us to the final round, where SUI is clearly the winner. The fact of the matter is that Aptos faces significantly more challenges than SUI at this stage. It goes without saying that this could change, but as things stand today, SUI faces a downhill battle, whereas Aptos is finally starting a very long uphill battle. And that's why, even though many members of the Coin Bureau team hold SUI and APT, most of them only hold SUI. And even the ones who hold both hold more SUI, if only just because SUI has performed better in recent months. But as the saying goes, past performance doesn't guarantee future performance. SUI is one of the few cryptos that's been leading in the crypto bull market so far. Most of the others have been lagging, including majors like Ethereum. To some, this means that the biggest opportunities will be found in the cryptos that eventually catch up. To others, this means that the winners will continue to take all. But what do you think? Let us know in the comments down below. And if you enjoyed that vid, don't forget to check out our latest SUI update right over here. And if you're not subscribed to the channel yet, you can do that right over here. That's me for now. Thank you very much for watching, and I'll see you again soon.